Good afternoon, everyone. We're just giving one more minute to have everyone come in and join us for this afternoon's webinar, and we'll go ahead and get started. Once again, welcome to today's webinar, which is How to Repair Your Credit, 3 Strategies to Solve COVID-Related Business Issues. I'm really excited today. We are going to be talking about a topic that a lot of our clients have asked us to comment on. And for those of you who are new to our programming, my name is Malini Krishna. I am a senior consultant in the business advisory service team within our community finance division at Pursuit. Pursuit is a community-focused alternative lender. Our goal is to ensure that our clients not only have access to the capital they need through our loan programs, but also the strategic guidance and business expertise to thrive and grow. Today, I am joined by Paula Garcia, who is a vice president in our community finance group. In her role, she serves as a business development officer, a credit analyst, and a business advisor combined. So she wears multiple hats. Her focus is to provide small business financing in New York State, as well as oversee community lending relations with banks, non-bank lending institutions, technical assistance providers, and other lending professionals. And she has been with our organization for 8 years, so I actually think an anniversary is in order for you, Paula. And she has a long-standing commitment to the small business community. Prior to Pursuit, she worked at New York City's Small Business Solution Centers and Axion USA. Given her long history and her varied roles here at Pursuit, she's going to be providing us with the perspective of things that a lender looks for in terms of your credit and offer insight on how you can present your credit story when applying for a loan. And we are also joined today by Tiffany Ordonez, who is from our partner Trust Plus, who, if you're not familiar with Trust Plus is a service of neighborhood trust financial partners, and they pair real-life financial coaches like Tiffany with action-oriented technology to make the most of people's personal finances. If you are a Pursuit client and want to be connected to Trust Plus after this webinar, please contact your Pursuit loan officer, and you can be enrolled in your service as a Pursuit client, and it is one of the benefits of working with us and our partnership with Trust Plus. Thanks, Tiffany, for joining us today. And I know you've worked with a number of our clients in the past and have been a coach for 3 years, so it's going to be really helpful to sort of talk about how personal finances affect a small business. So thanks, both of you, for being here.
Thank you. I'm excited to be here.
Thank you.
Paula, I'm actually going to start with you. You know, when we talk about credit, it's often a very sensitive topic with a lot of our clients, and they don't want to. But many of us have hard situations that affect our credit reports. What do you think are some of the common things that have impacted a person's credit, especially as a result of COVID over the last year and a half?
I mean, that's a really good question. Hello, everyone. First of all, as Malini just said, I'm Paula Garcia, and I am a credit analyst here at Pursuit Community Finance. So I get to see credit reports all day, every day. So I'm here to provide you with a lender's perspective in what we have seen as we underwrite loans during COVID times. COVID has been hard, and financially it has impacted a lot of Americans and everyone else in the world. Some of the good things that we have noticed is people paying down their debt, credit card debt and personal loans completely, and this is due in part to the stimulus packages provided by the government, which included unemployment benefits, the EIDL loans and grants, and also due to some of the deferments on student loans and mortgages, some people decided to put that money towards other debt. Now, in terms of issues, what we have seen the most is excessive lateness, people being sent to collections, and low credit scores. The good thing is that credit bureaus do report the dates when each lateness took place, and we are able to see that when the lateness started. And usually, if your story, whatever you told us about your situation, matches the dates on when COVID occurred, indicates that the impact was, directly related to COVID. So my point is that we will take that into consideration. We understand that this has been a very tough time, and as long as you are as long as you're proactive by following the steps that Tiffany here is going to be giving you, we will not hold that against you when making a loan decision.
Thanks. Now, Tiffany, we've talked a lot about this. Things happen on everyone's credit report, right? And so if you don't mind just sort of delving in, what is actually in a credit profile?
Sure, yeah. So in a credit profile, when I talk to clients, they'll generally know some of the basic things that are on there. For example, some personal information, which is why it's important to keep your credit report secure if you download it. Your payment history, so which accounts you've paid on time, like Paola touched on, the accounts that you have and the types. For example, if you have mortgages, mixtures of loans or credit cards, which accounts you have on there, and if they've gone into default or delinquent, if it's in a charge-off status or collection. Generally, people know that there's 3 main credit bureaus and lenders. So here we have TransUnion, Experian, and Equifax. Some people also are unsure why some scores are different across the 3 reports, and that's why it's very important to just take a note of what accounts are being listed. I recently had an example of a client who became an authorized user on a friend's credit card to help her credit out, but she saw that the credit score went up on 2 of them and not TransUnion, and then when we looked at the report, it's because it just hadn't been updated there. So it's important to keep an eye on both the report and score.
Here's a question, and I'll just invite people, if you do have questions, please put them in the chat and I'm happy to ask them. But here's a common question we get often asked is it important to look at all 3?
Yes, it is important to look at all 3 because when you're making financial or they're looking to finance large things, in some cases they're looking at all 3 reports and taking the average. But in these cases, in the example that I gave earlier, some accounts may not be updated on all 3, or there might be a collection on one of the reports or all 3. So it's just important to be mindful of what's being reported on what, especially if it's going to help your score out. You want to make sure if they're supposed to report it, get it on all 3.
That's good to know. So there's a profile, and why does it actually matter for some of the other folks? I'll invite both of you to answer this question. Do you want to start?
Credit being really important, or why it's important?
Yeah, why does your profile matter for other folks? Just to make sure that we're hitting the point home.
Well, it's really going to determine, the interest rates that you get, whether or not you're going to be approved for the financial product itself. In some cases, landlords may not approve you for an apartment. In the best case scenario, if you have excellent credit, you can even negotiate some money off the rent. So that's always really exciting if you're able to use credit in that way. I've seen with clients, their insurance is really high and they've shopped around for quotes, but what's getting their rate up is their credit score. So that's something to work on. And it's like these small changes that can build up where, if you can be saving on these financial products just because of your credit score really well. I recently had a friend who got a car loan at 0% because she had excellent credit and there was a promotion offer. So there's these great things that if you have credit, excellent credit, they can really work in your favor. And I'll give one more example. Some employers may look at your credit. This is a personal case with a friend, but she applied for a job with the Department of Justice, and they actually called her and asked her why her credit card balances were so high. So, in some cases, they do take that into consideration.
Paula, we've worked with a lot of borrowers here at Pursuit and over time and have improved their credit scores, which has helped move them into other loan products and other areas within even Pursuit, right?
Yeah, absolutely. So we have a lot of repeat clients, and it's really satisfying to see that some of our clients do follow our guidance, and when they do come back for other loan products, they have been able to increase their credit report scores, sometimes by even 50, 60, 70, 80 points. So what that shows us is that number one, there's commitment from the client. They do want to improve their overall credit usage, and that gives them or give us more flexibility to provide them with larger loans and eventually, for them to be able to go back to traditional banks.
So Tiffany, one of the biggest trends that we're sort of seeing this year is there's a lot of startups and a lot of new people and younger people coming into just starting their own business, what if you have no credit history? What kind of things would you recommend sort of talking to people in terms of like, what if you have no credit history whatsoever or whatever, that kind of thing?
First of all, I think you want to think, the goal and the motivation, like Paula said, super important. So I'm glad that they have established the goal that they have set forth for themselves. I'm always going to ask, what their support looks like, and if there's someone in their support system who trusts them enough to authorize them on a credit card that has a good length of time, low balance, no missed payments, that's such a great way to start off your credit. If you have a good banking history, you can reach out to your bank to talk about what credit cards may be a good fit for you, because since you've engaged with them through the financial system, they're more likely to approve you. In some cases, if those are things that you can't tap into, I would always suggest, department store card. They tend to have higher interest rates, and that's why they're more willing to lend or approve you for a department store card. But as long as you know what steps you need in order to manage the card well and responsibly, it does not have to cost money to establish credit and build an excellent credit score. It does take.
What actually is in a credit score then? Let's talk about that.
Yeah, so there are 5 main categories that go into calculating a credit score. And what I hear a lot of clients coming to me and comparing their scores, we hear a lot about the Vantage scoring model, especially younger people who are connected to Credit Karma or through their credit cards, third-party apps like CreditWise or Chase Journey. And what it means is that there are these 5 categories that they're basing off your credit score from. You have your payment history, how much you owe on these products, the length of time that you've had with them, the types of credit that you're using, and how many inquiries or how often you're looking to borrow. So all of these things are taken into account and make up this credit score on your credit profile.
So I'm going to pause and ask a question here. Here's one that we often hear. Is Credit Karma the same thing as your credit report?
I hear that one too. So I think Credit Karma does a great job. If you look into it and you check into the accounts, it's going to show you it's going to show you what is on a report. But most often than not, people tend to hyper focus on the score. And when you're looking or seeking lending, they're going to look at a FICO score. So they can be similar or in the same ballpark, but the way that they weigh these categories is different. So if you are looking to make a big purchase or looking for a loan, I do advise, through Trust Plus, you can look at your FICO score for free and to make sure that your FICO score is what you think it is. I think Vantage scoring models are great just to get an idea, but you do want to tend to look at your FICO score and check that out.
Got it. Paula, can you just talk from a lender perspective that Credit Karma is not the thing that we're actually looking at? We're looking at the actual 3 reporting agencies, correct?
So at Pursue, we actually use Equifax when we're pulling credit reports. We don't use any other credit bureau.
Okay. So I'm actually going to turn it back over to you. We've really talked about with your personal finance. What does your personal credit history have to do with your actual business history? And what's the difference between your personal credit versus your business credit?
So the biggest difference here is that, for example, your personal credit score is linked to your social security number, while the business credit report is linked to your EIN number, which stands for your employee identification number. This is the number that you require when you start your business and you start filing your business tax returns. Your accountant can set this up for you, or you can do it yourself. So credit bureaus take many of the same factors as in your personal credit report to calculate your business credit score, like payment patterns, outstanding balances, and credit utilization ratios. But in addition to these, what the business credit report bureaus do is that they report on your demographics, your industry, the length of time of the business, how many employees you have, and any other public records, including bankruptcies, judgments, tax liens. And most of the times, what you will see in the report are vendors and your suppliers, like if you have a grocery store, like your milk provider, just to give an example. But what I wanted to emphasize is that most lenders, including the big banks, they focus much more on your personal credit report. And that is the reason why you never really hear a lender requiring a minimum business credit score. It's usually your personal credit score, right? And here at Pursue, we also focus primarily on your personal credit report. The only reason why we're looking at your business report is just because we want to make sure that you're paying everyone on time and you don't have any tax liens or judgments. But again, make your personal credit a priority versus the business one, or just don't worry so much about the business credit report. I hear that a lot from clients, and again, it's your personal one that really matters.
Can you talk about when you're looking at a credit report from a lending perspective, what are common things that you think that sort of raise a red flag or could be perceived as negative?
So we look at different things. For example, your payment history, right? Every lender wants to get paid. And the only way for a lender to really know the probability that you will pay in the future is by looking at your history. And that is why it's so important. It's one of the most important things in your credit report. The lenders, and including ourselves, want to invest in a safe bet.
So Tiffany, what can a person do if they have sort of negative or some dings? Because this is just part of life, right? And I just want to emphasize to anyone that's listening, there's very few people that have like a perfect credit score, right? Everyone has some sort of situation. So what are things that a person can do to improve their credit score?
Well, if there are some negative remarks or dings, especially if it's not a common occurrence and there's no pattern that's built up to it, I would always recommend reaching out to the lender and explaining the circumstance, because if it was just a matter of forgetting to pay the bill, as one of the strategies here is to automate the monthly payment so that doesn't happen, typically the creditor will be more flexible in overturning the missed payment or doing a goodwill adjustment. So always reach out and hear their flexibility. I also recommend sometimes that if the first time doesn't work with a representative, call back again and talk to another representative. So, in some situations, the third call was the one where someone was flexible with them. So I would always say, give it more time. If you keep showing that you're making the payments on time and you have that missed payment, it's showing that track record that you're back on track. So they're more willing to be more flexible with you.
And in general, it just seems like if you have some good personal finance habits, it will improve your score over time, correct?
Yeah, it makes it easier when you develop a system, because constantly, when people are stressed about their finances, it's just overwhelming. But if you're able to create these small habits where finances becomes less and less of a overwhelming thought and stressor, you'll find that things just tend to fall into place. And we always recommend some of the strategies here again are checking your credit report, making sure that things are disputed if they're a mistake. For example, there was a credit report that I had checked, and she was aware of her accounts, but saw that there was a $10 charge on this card that she didn't use often. And she said, I didn't make that charge. And when she called, it was fraudulent. So there's always little things that you should just continue to try to check your accounts, as often as you prefer, but at least, I'd say once a month to make sure everything's reflecting accurately.
You think once a month is like a good benchmark for most folks to kind of keep up to date on what's going on?
I do. I think, depending on those smaller accounts too, if there are accounts that you're not really using, just making sure that you're able to get a quick snapshot that nothing's been charged. I have many client examples, but another one was where the wife was in charge of the finances and she didn't know that the husband had used the card for that month, and it went unpaid because she was not checking all of the accounts. So they actually had to call back about 2 months payments, and they had only found out because the card was declined on the husband's side that he had used. So I would always say, especially if you're in a partnership, make sure that everything looks accurate and try to check it once a month, just to give it a quick glimpse. So it's not a phone call that is, can you reopen this card?
So one of the reasons we asked Tiffany and Trust Plus to join us today was, one of the things that we've commonly heard that, if you are in a situation where something negatively impacted your credit score in the last year, maybe you had a few few missed payments or something got a little bit behind, which is very common, to be perfectly honest. It's what we see a lot in the last year, I think. And it's not necessarily a bad thing, but we've heard a lot of folks going to these credit repair agencies, and I was just wondering if you could just talk about what you do that's a little bit different than that, than just, what, you get those numbers if you just Google fix my credit, what Trust Plus does in general.
I think it's just very important to note that you have rights as a consumer, and you can do and take the steps to work on your credit without having to pay for a service that's charging a monthly fee to send out these letters for you. That's just your right as a consumer through the Fair Credit Reporting Act to make sure that if there are any mistakes, to fix them. So a lot of these companies will also prey on people's overwhelming thoughts and feelings that they can't control their finances and that they're in a place that they need to pay to repair their credit. In some of the worst cases, it's being unaware that sometimes they just will let these accounts go in order to settle or negotiate the accounts, and people are not aware that that's what they were planning to do with their credit, or are uninformed about what these letters actually do. In some cases, you will see accounts drop off when you dispute it, but that's just because of the law that they shouldn't be there while you're in an active dispute, but they can resurface if it's still a debt that you owe and they have proof that you owe it. So I think there's an important component with Trust Plus that you are getting the education aspect. And my favorite, thing that I hear from a client is that what I've learned from you, I was able to help a cousin or a friend, because they are aware of the education component of it and of their rights, rather than working with one of these credit repair companies that are not giving you the full information or full picture of what they're doing.
I also just really appreciate your process, just because there's multiple things that you actually get to do, right? So there's an actual person you're talking to, and then there's the technology component. I will just say, I actually have used the service myself, which has really been helpful. It just is I think of myself as pretty financially savvy, but it's good to always have reminders and things in place. So I just wanted to just talk about some of the automations and things that you have set up, and that you can actually talk to a person.
Yeah, thank you so much. I sometimes too think a financial coach can use a financial coach. It's always, finances can be very cyclical. And like I said earlier, if you have a system in place, you think about them less, but there's always these changes that can happen. Life adjustments, I'll give myself for example, I'm moving to Philly in the summer, and that's a different change, and it's requiring a different set of systems in place to make that change. So we do take a holistic approach to personal finances when we're talking to you. We take your priorities into consideration. We don't judge any of the transactions that you're making. We're really just taking into account what are the financial goals that you've set for yourself and what are ways to go about that. If it's cash flow management, if you want to save more, if you just want to put more towards debt or credit. Talk about credit. Yeah.
Thanks. One of the things that we recommend is to actually work with someone who's really reputable. This is an example of one, but also just to do your due diligence if you are talking about your credit with somebody, just because you are revealing sensitive information. So make sure it's someone who can help you in that process.
Absolutely.
Paula, I'd like to just turn it back to you and sort of talk more about the nitty-gritty of the personal credit report. When you look at it, what are numbers that you get from it, or practices that you're really looking for besides just the history? And how can that help when you have conversation with borrowers or potential borrowers? How is that a basis of conversation?
Sure. I mean, we take a look at everything, obviously, and I mean, in terms of credit, one of the things for people to have in their minds is that outside in the real world, the credit score will matter in terms of the rates, the interest rates that you do get, but here pursued. However, we do try to look beyond that. We want to hear the story behind any blemishes that the client may have, and what we're looking for really is we want to see that they have the ability to satisfy the creditors, and that they use the credit and loans responsibly. And all is relatives. For example, for someone may have a really good credit score, but have really high borrowing, a lot of debt, and that might be a red flag for us. While someone that may have a really low credit score because they missed a payment, a medical payment, or they forgot to return the cable equipment, and they were sent to collections without them knowing. So here at Pursuit, we try to not hold that against them. As long as they are aware of this, that they are aware that one missed payment will deduct their score by maybe 100 points. I would say that, like, as a best practice, the ideal credit report is someone that has had loans for a very long time, pays their credit cards down to zero or near zero regularly, and does not show any signs of maxing out their credit cards. And does not show signs of borrowing recklessly, but that the loans that they do have, they do pay them off. So whenever we see someone that has like a maxed out credit card of $20,000, entirely unnecessary for discretionary expenditures, that's not a sign of a responsible and frugal credit use. It's what we call a lot of times living beyond your means. So basically what we're looking at is we go by a basic rule. We want to see how much you spend on a monthly basis versus how much income you're getting in, right? And we can see that really easy through your tax returns. And these are some of the things that we look at on a daily basis. What I will say is that time cures everything, even bad credit. So it's not never late to start, and the time will go anyway. So just start today if you have any issues, and we'll be able to talk to you and see how we can help you as you are fixing those issues.
So we've got quite a few questions, and there's one that's sort of related to that. How quickly can you make changes and have it affect your credit report? Does anyone have any perspective on that? Tiffany, like, I'm guessing it's not overnight, but if you had several late payments and then you have a regular payment history of on time, when can you expect to sort of see some changes on your credit report on the positive side?
Well, the accounts tend to update once a month, and it can change or vary when you're looking at your report. But on-time payment history is 35% of your score. So the more time that passes of you making payments, your score is going to increase. And going back to that example, if you're able to keep a record of making payments on time, always call back and try to get those blemishes removed from the missed payments. They can see you in a new light, like Paula was saying, if you're able to tell the story and then show that you're living below your means, and you're able to show that story, your credit score is going to increase. But as far as the time, it's going to depend how many accounts have these blemishes. If it's your only account and you have missed payments, it's going to really affect your score. So it's going to take some time because the length of history or what they're looking at is only one account. And so, it can take some time if you have missed payments. And it's hard to give a time frame for that. There are different factors that are going to go into it. But
so the other question that's sort of related to this, and we have quite a few. If you have questions, by the way, please post them in the chat or the questions box so we can get to them for you. If you have high levels of borrowing and paid down debt, how quickly does that change your credit?
Yeah, I like this one because it can be pretty instant within the month when it's updated. If you are looking at Credit Karma or anything, it'll always say your score changed by this much, and I see it on credit reports too. So that is a nice category if you don't have those missed payments. If you're able to pay down that debt, it's really great to see that instant change.
Yeah, and I can actually attest about that. I actually had a client that had really high credit card debt, and he went and paid off the balance. And he asked me to pull his credit report one more time the following month, and his credit went from like 690 to 705. And it might not sound like it's a lot because it was only 15 points, but those 15 points put you at a different threshold. Like you pass the 700 points, which is what regular banks and traditional banks are looking for. So it makes even a tiny increase in the report can make a huge difference.
That's helpful. So Paula, this is actually a question for you. What do you look at on the business credit report, and how can I build business credit?
So The way to build your credit, your business credit report, okay, make sure that you are, you have an EIN number and that your vendors, whoever you are doing daily business with, is reporting to the business credit bureaus. Also, you can get a business credit card. Whatever type of lending you get, just make sure that that lender reports to the credit bureaus, because it doesn't matter what you get. If the lender is not reporting, then you won't be able to create a history. But again, it's not that important. I would say focus more on your personal credit buildup.
That's helpful. This is another question. When do late payments disappear off of a credit report? Is it years, months? The question is it, do you have a sense of when it drops off? Is there a cutoff date?
It's going to be 7 years where you can still see the missed payment. It'll show, the last payment on there. As the credit reports that I see with TransUnion, I'm not able to see when the missed payment occurred if it's been more than 4 years. But I always say, the older missed payment is, the credit report is very much affected by what's most recent. So as that missed payment gets older and older, it has less effect on your score.
Okay.
Yeah, and I would add to that Pursue, we really look into that, like as Stephanie said, like the more time that has gone by, the less important it is. And actually, and also we ask our clients what happened during this time. Usually we tend to see like latenesses throughout like a certain amount of period. And sometimes when we talk to the clients, they're able to tell us, they got sick or there was a family emergency, and the story that they tell us matches the credit report. And so that's really helpful for us to see. And again, the older they are, the better.
And Paula, this is kind of the difference with the CDFI approach versus some of the other kinds of lending options that are out there, right? Like you can communicate that with your lender a little bit more freely if you're working with something like a personal banker or CDFI.
Yeah, absolutely. I think that's what really differentiates us from other traditional lenders, is that we will take the time to really understand the story, and to get on a phone call with you and spend as much time as we need to understand what's going on. Sometimes I have spent with my clients up to 45 minutes, and then once I get the whole story, I'm able to go back to my team and explain what happened. And we have been able to approve some loans that even I didn't think we could, but because we believe in you, that you are committed to improve it and to pay back all your debt, then we're able to approve the loan.
Tiffany, can you talk about renegotiating credit card debt or any of those other things people have questions about, tips, tricks, things that they should be doing if they're in a difficult position?
Throughout, when COVID started, I would say before COVID, creditors were less flexible, but then we started hearing from clients that had called and even gotten their interest rates reduced. In some cases, the negotiation wasn't there, but they were able to pause some payments during that period. But I would say it can be difficult to negotiate while the account is active. We see those negotiations take place if the account has missed payments or is in a charge-off status, and you're more settling the account. So I've seen some leeway in the interest rate that they've given you, but not so much when the account is active in terms of negotiating balance if it's still in good standing.
Okay. Can you just talk about what it means to be charged off?
Yeah, great question. So a charge-off is an accounting term that businesses will use to say that there's been more than 6 months of missed payments and they are writing it off as a loss. So from that point, the account's closed and they're able to then sell it to a third party if they choose, like a collection company.
Got it. Paula, this question is for you. Where do I find out what my business credit is? Is there like a reporting, or is there something they can do?
Yeah, so Equifax and Experian, they also have, besides the personal credit report website, they also have one for the business one. So you can just go to equifax.com or Experian and pull it from there.
Here's a question in general. Should I lock my credit report?
We see that Sorry about that. We see that all the time whenever there has been fraud, clients do freeze their accounts, and that's not a problem. When we try to pull it, all we do is we alert the client that we were not able to pull it because it was frozen, and then they freeze it, and we're able to pull it, and then they can go back and freeze it again. Absolutely, if you were a victim of fraud, absolutely.
Do you think that's generally a good practice, Tiffany, to keep your credit frozen or your credit report frozen? Or is it?
I will also say, if you've had that history where, someone has your information, definitely you're going to want to protect and freeze your credit report. I know, the hesitation before was that it would cost money to freeze and unfreeze your report, and now that's changed. So if you feel more comfortable with freezing your report, I think that's a good tactic. Personally, I do check my accounts pretty often, so I know I'll be alerted if something is on my report that shouldn't be. And I think it's more of a personal choice if you don't have that history of fraud, if you want to freeze it or unfreeze it.
Well, great. We are just over the 30-minute mark, and I promised around 30 minutes. So I'm just going to talk. We talked about 3 strategies really, and just to highlight it because we've done so many different conversations here, and this was really helpful and useful. I think in particular, just talking about the fact that personal credit is such a critical factor in lending and your financial history story. So it's not separate from your business credit, especially when you're looking in from a lending perspective. And we just want to also remind people that things have happened, especially in the last year, and there is help available for you if you are in a situation that you are not, in the most ideal scenario, or you had to come back on a few missed late payments. There's practices and things that you can do. So we would say the 3 strategies are: 1, monitor your credit report, as Tiffany just said. Make sure that you know what's going on, and that way if there is fraud, you're not surprised once you're in a loan application. You know about that information before and ahead of time, and you can take corrective action. And it's an important piece of information about you, so keep regularly reporting. Tiffany suggested monthly is a good practice. And so I think that was a really good one. The second one was practice good personal financial habits, because your personal finances actually are what really inform that credit score. So, some of the basic things that we always talk about, budgeting, automating payments. Is there anything else that you think are just sort of good personal finance habits that we should that are pretty easy to do?
I was going to say living below your means. Maybe that's not an easy thing to do, especially with the fixed expenses living in New York City. I'll attest to that. But yeah, I would say, just make sure you take an inventory of what's important to you. And if some of those discretionary expenses are keeping you from that, then just having that conversation.
And then the final one is communicate with your lenders and your creditors as well as your partners. I think that was a really illuminating one. This is, I think, something that we often come across, Paula, is that a partner's credit can affect your credit. So communication across both the partners that affect your personal score, but as well as who you're talking to about lending is a good practice. So monitor your credit, practice good financial habits, especially in personal finance, and communicate to your lenders. Is there anything else that you think that we really are missing or that people should be aware of in this time? And if there's any parting words from both of you?
I think there are a lot of resources out there. So if you did want to talk to a financial coach, Trust Plus is always happy to talk to you.
And as I said before, just make a commitment to, get back to get into a payment plan. Just show us that you are committed to improve and fix your credit, and we will be able to get that loan approval for you.
Great. Well, thank you both for joining me today. This was definitely a topic that was very much asked about from our client base, and we appreciate everyone who attended today. This is the start of the conversation. Again, I want to remind anyone who is a Pursuit client, if they'd like to be connected with Trust Plus, to reach out to their loan officer. We're happy to facilitate that connection and conversation. especially if you want to work on your personal finances and then want some strong tools that are readily available for you. The other thing is continue to keep in touch. We are actively lending at this time, so we, this can translate into resources and finances for your business. So please keep in touch, and we look forward to seeing you at our next webinar. Thank you so much. Have a good afternoon.
Thank you.
Thank you.